Hey, welcome everyone. Forex Confidant, Military Mindset for Trading, acronym OODA. Before I get into this module, I'm going to give you the background on how I discovered this acronym. I have several children that are in U.S. Coast Guard. One of them is in a small boat battalion, I guess you would call it, and his main focus for his battalion is actually seeking out drug runners, arresting them, and confiscating the paraphernalia that they have. Now, when he first told me about the training that he had to go to before he actually was able to go out on the small boats, he discussed something that was known as OODA. He did not know exactly where this military mindset for the battlefield came from. So I was very, very curious about it and decided to do some research myself. And I found that the OODA actually he told me it did stand for Observe, Orient, Decide, and Act. But he didn't know where it came from. They probably said it in class, but knowing knowing him as a student, I would probably, maybe he was sleeping at that point. But the OODA loop was a strategy that came from Colonel John Boyd, and in the mid-1950s. Now, what's really interesting about this strategy, this loop, it's become known in psychology just recently, known as submodalities and modalities. And they only started really researching this and actually trying to decipher this in the 1990s. So it was not at all part of anything in what would be traditional psychology in the 1950s. So this guy was groundbreaking in his work to help pilots become better pilots in order to survive. So I basically looked at this and said, well, traders want to survive. They want to make money. They want, their gains to be greater than their losses. So I'm wondering if somehow I could apply this acronym to trading. Now, an interesting point is that I found out that it is now used in many different realms, such as business itself, litigation, intelligence and information gathering, law enforcement, and even advanced medical treatment. So here's the thing. My fiance, being an RN, she was also exposed to this for critical care. So they're constantly doing this loop, which is observe, orient, decide, and act. And it's not a one-time loop, it's a continuous loop. So if they decide and they act on something, they have to reobserve, reorient themselves, and then redecide and act again if the decision that they made is not proper. Now, you could see a lot of this in Top Gun, if you go back to watch the old movie, where Tom Cruise is flying around in that Tomcat, and he's trying to lock in on a plane or another jet, and then he says, no, the approach is not good, and he breaks off. Because when he made that decision to act, he felt at that point that he wasn't going to be able to get the kill. Matter of fact, he was putting himself in danger because it wasn't the right, whatever it is. I'm not a pilot, and I could never fly a jet. And also, I want to state right here up front, is I am not a psychologist, nor do I pretend to be one. The only thing that I've ever done for myself is try to figure myself out. And I think that all good traders need to figure themselves out in order to overcome their own obstacles. And I think this is a good little mini way of doing it. Let's say, well, how can I put this? Mini what? Masterclass. Let's say this is a little mini masterclass for you to get your feet wet and make a decision to figure out how you work and why you do certain things. A lot of people talk to me about, trading is really stressful. It's one of the most stressful things that I've ever come across, and I'm a doctor, I'm a surgeon. Well, that's kind of strange because surgery is pretty stressful, and you would need to really be on top of your game if you're going to be cutting somebody open and taking out whatever you're taking out, you know, appendix, whatever. See, but what I once read is that the problem is not, you know, the stressor in the environment. You know, the stressor in the environment is like when you come into your trading office and you decide that you're going to, you know, you're going to have a campaign in trading for whatever reason. It's not the stress of the marketplace. It's your thoughts about the stressor. And that's exactly what Colonel John Boyd was talking about. The situation, yes, is very stressful, flying at 900 miles an hour and then looking at for targets while other people on the other side are flying 900 miles an hour looking for you. So he had to come up with a way to help alleviate that. So pilots could actually focus on certain what are now called meta loops or meta programs in order for themselves to become true predators in the air. And I'm going to take this and I'm going to try to amalgamate it into what I believe would be good for trading itself. So let's get in. First part is observe. Now, what John Boyd discovered about soldiers on the battlefield was that they will enter into certain submodalities. Again, this was not discussed in psychology in the 1950s. This is recent stuff in the 1990s where they actually talk about metaprograms and submodalities. And I'm going to give you a good book to read if you're interested in this subject. And I just find it fascinating because the example that I'm going to give you is that submodalities, you know, are in our DNA. Now, it served us well when we were hunters and gatherers, because our ancestors could make two mistakes. They could make the mistake that the noise that they heard in the bushes right next to them as they were going to get a drink of water off the river was a predator. And that predator could be the form of a lioness, could be, I don't know, whatever type of animal out there that's going to eat you. Most likely it'll be a cheetah, a lion, something like that. And they could flee. They could get to higher ground. Okay? Or they could go to the watering hole and hear noise in the bushes and think, that's nothing. It's probably a bird nesting. No big deal. Matter of fact, I want to go back into that nest later and grab a bird and some eggs so we can have something to eat. But there actually is a predator in that bush. Well, the cost of the first mistake would be the needless anxiety. And that's basically what we talked about in the last slide, where I said that it's not the environment is not the stressor. It's the one's thoughts about the stressor, the one's thoughts about the trading problem. Now, you cannot be killed trading. You could lose your money, yes, but there's always a way to regain money and re-enter the marketplace. But of course, it's not a situation that most people are going for. They don't say, I'm starting with 100 grand. I don't care if I lose it. I'm going to put another 100 grand in. That's not what we're trying to do. What we're trying to do is we're trying to avoid those catastrophic losses. And the one way of avoiding the catastrophic loss is understanding what a loss means to you. Okay? If you understand that loss is a part of trading, then you're going to learn how to control those losses so that you can come back and trade again. But what most people find that losses are totally unacceptable. So they let that loss run. They never close it because they have a hope of averting the loss. And as a result, the loss continues to grow until it's forced upon the trader to take it. And that psychological impact of forcing a large loss upon an average trader, he can't even accept a small loss. It's going to be devastating for that trader. So I know I'm going off a little bit on a tangent there, but I felt that it was an important thing to bring up. It's how you frame what your submodalities are to losses. And that's something you got to ask yourself. What are they? Yeah, if you were a type of person that, an A was the only thing that was acceptable for a course in school, well, you're going to have a hard time understanding that, well, a C might do in trading as long as you escape with, your account. That's important. So irrational behavior is in our DNA. And as our ancestors, the hunters and gatherers, they would definitely take the first choice. If they thought there was a predator in the bush, they didn't need anyone to basically tell them that there wasn't. They didn't wait to find out. They took off. They were very defensive. They went right to flight. So consequently, we evolved from the first mistake. We evolved to make the first mistake 1,000 times. So we're constantly always looking to run. Fear forces us to flight. Now, unfortunately, our mind can't determine that, in a marketplace, there's no real predator. It doesn't matter to the mind. The mind is there to survive. So therefore, if you put a stress on trading, the mind starts going back to the submodalities and the modalities of how you work. Now, the best example I think I could give, again, another movie, was Saving Private Ryan. If you go back to the opening scene of when they hit Omaha Beach, there's a scene where the beach is being shelled and the guy actually loses his arm. His arm gets blown off his body right from the shoulder joint or shoulder blade. And what does he do? He walks around in a circle and then picks up his arm and runs away with it. Or starts heading back up the beach with his arm in his hand, not even realizing, holy smokes, my arm just got blew off, because he was in a submodality. He was reacting to stress the way that he taught himself to react to stress. And you could see this constantly with people. When people are under some type of stressful situation, they revert to some type of behavior that they pre-program themselves to do when that type of stressor is affecting them. So what Colonel Boyd needed, he needed a method to override these submodalities. And this is when he came up with the OODA loop, and he started implementing it with his pilots. And we're going to get into these modalities, and I'm going to bounce around a little bit, but it's all here so that we can get the most out of this little mini master class, if you want to call it. Okay, call it that. All right, meta programs, you have to become aware of yours in order to change them so that you become better at anything. So the idea here is that if you could become better in trading by using OODA, you could become better at anything using OODA. That now in work, at home with the family, maybe you could stop yourself from overreacting to whenever the kids act up, or the grandkids, or even the mutts that you have, your dogs. But the idea is that these are largely unconscious ways of behaving that become automatic as you mature into adulthood. Yes, you have taken these from your adolescence, even probably pre-adolescent years, and programmed yourself to behave in a certain way when certain things happen. Now, your mind is an interesting thing. I mean, it's always looking for patterns. Just like, in trading, we're looking for patterns, okay? And we're looking for certain things to happen in order for us to be able to enter the marketplace. But these submodalities, or they're called, sometimes they're called drivers, Again, like I am not a psychologist, nor do I pretend to be one. And that book on the bottom, Figuring People Out by Dr. Michael Hall, is a great book to read in order to help yourself decipher what your submodalities and metaprograms are. So with use of this, you could better your life in every aspect of life, because you just become better. You start to understand yourself, like, you know, oh, I'm acting this way because X happened, and, you know, I'm catching myself entering into an unconscious behavioral pattern. And most importantly for trading is that you can catch yourself before you do something silly. So these metaprograms are your preferences, okay? And this is an interesting point that I read. And the point that I read was that they represent what you consider to be your reality. But what is reality? Reality is a bunch of submodalities that you put together to explain what's happening. So we really don't know what true reality is, because they're all a bunch of submodalities and metaprograms that we put in place. So there really is no reality. My reality is different than yours because of what I basically put in place. Yours is what yours is because of what you put in place. So in reality, there probably is no reality. And I know this is getting kind of deep and metaphysical or whatever, but I can't see any other way around it. It is what it is. It's what we think, and that's how we react based off of what we see. So here's the point. Whatever one sees out there probably depends heavily upon what one expects to see. The trader who expects to see a bull market will only look for information that supports his expectations. You know, he sees a head and shoulders pattern or bottom on the chart and ignores any evidence that might contradict the possibility of a bull market or a bear market, whatever it is. So this is the point that I'm trying to make here. I'm trying to break is that in order to really be the best at this, we have to understand ourselves. So let's get on to the next slide here. So the first part of the OODA is observe. And I want to call to your attention The Art of War by Sun Tzu. Now, he pointed out, I don't know how long ago, I don't know when that book was written, but let's say 1,000 years ago, that battles are won in the mind before they start. So your mind is also as creative as your hands. If you think about it this way. In your mind, you always picture and imagine what it is that your hands are going to do to touch the physical world. Example. You and I are on a journey, and there's a river that we need to cross. So the first thing that we do as human beings is we start looking around. We observe our area of where we're standing. And you notice that there is a downed tree that just can make it across the riverbanks. And you say to me, Tom, look at that tree over there. I mean, we could probably pick that thing up and stand it up and then drop it so that it crosses the river. And I say, yeah, that's a great idea. Let's go and do it. So we do it. And guess what? We get across. Now, everything that happened was in our mind first. We created in our mind the solution to get across the river. And then we used our hands to do it. So the mind is actually more powerful than the hand, because the mind basically comes to the solution, and then you use your physical body, your hands, your legs, your back, your muscles, to do what you need to do for a physical solution to the problem that at hand that is required for a physical solution. So in trading, there is no physical solution. You cannot grab the marketplace by its shoulders and shake it into submission. Believe me, I've tried. It doesn't work. Just end up breaking computers. But so your physical and mental state must be assessed before you start trading. Well, what are you talking about, Tom? Well, what I'm talking about is that you should definitely get into some type of meditation program. You should definitely maybe even think about doing yoga, or you could do Tai Chi, which is great. Anything that's physical mind-body connection when you're not trading is very, very helpful. Not even say, oh my God, this guy's going into like the mumbo jumbo stuff. Yeah, I mean, mind-body connection is really important when it comes to this stuff. So you should actually get into doing something that quiets your mind so that you could watch your thoughts. Your thoughts are the most important thing. Your thoughts create emotion. Emotion creates action. And if you don't have your thoughts under control, then you're just going to go back to those sub-modalities and act out what it is you think you see out there. Okay? So daily self-analysis is an extreme important part of trading. And what is daily self-analysis? Well, it's really just the point. Let's move on. We have 3 parts to this. Of observation for trading, daily self-analysis, mental rehearsal, and market conditions. This is what you could call the physical, or the outside realm, the world. Okay, both of these are taking place in the mind in order for us to conquer these. So mental rehearsal or daily self-analysis. Let's get into that. Daily self-analysis is something you should do. You should basically sit at your desk or sit outside your trading room or wherever your trading is, and you should sit down and you should take a couple of deep breaths. Relax yourself and ask yourself some questions. And my questions that I ask myself is, Tom, is there anything bothering you today? Did you go out to the grocery store and get annoyed by a guy that stole your parking spot? Did you not sleep well? Are you tired? Are you sick? Do you have allergies that are bothering you? Allergies constantly bother me. And I always need to take an allergy pill. Now, that allergy pill sometimes can make me tired. So a lot of times what I'll do is I'll put off taking the allergy pill, knowing that I have to deal with allergies when I enter the trading arena. So once I ask myself those questions, I ask myself, how do I feel on a scale of 1 to 10? I feel like an 8 today. That's great. I feel great. If I say that I feel like 4 or 3, that's poor. Most likely I shouldn't enter the trading arena if I feel poor, because I'm not going to be able to trade well. I'm going up against some of the greatest minds in the world of trading out there. I can't just enter if I don't feel too well. I'm going to get my butt kicked. And I also know that missing opportunities in trading is minor compared to not feeling well and having losses. So I'd much rather miss an opportunity, because there are oceans of opportunity in trading. You can miss a session. You can miss 2 sessions. You can miss 3 sessions. it doesn't make a difference. You're not forced to trade, and that is your strongest point, is that you're not forced to do this. If I was feeling sick, I'd show up at my office with a sore throat, taking whatever, ibuprofen. At the time was aspirin. I still enjoy aspirin. I don't understand this ibuprofen stuff. I'd be forced to go into the marketplace and trade. It didn't care. My treasurer didn't care that I had the flu. He'd be like, yeah, we'll throw up in the bucket next to you and just keep going. Not a good place to be. Not a good place for profitability. Matter of fact, when I felt like that, I was always on the defensive. I never actually held any trades. So if I made a market like 12.15, somebody hit me at 12, I immediately start looking immediately in my brokers like, is there what's the market price? 11.13. I'm 12 offered, and they would pay me. So I'd be in and out at the same price because I wasn't feeling well. I couldn't think straight. And you have to understand that too. If you don't feel well, stay out. All right, so this is the simplest way. Ask yourself those questions, and then on the scale of 1 to 10, how do you feel? Simplest way. Observation part 2. This is the part where you're still sitting outside the trading room, and after you asked yourself those questions and you felt that, hey, I'm an 8 today, well, this is the part where you should be doing mental rehearsal for your trading day. Now, the night before, you should have been setting up, your ideas, look at the low risk ideas. Your trading log should be all set, should be ready to go. If you want to trade the open indicator, you're already set for that. If you want to trade the fret system or any other tool that I gave you for the marketplace, should be ready. But this is where you're going to observe your thoughts. And you should be pretty calm because you did some breathing exercises and you mentally prepared yourself. But now you're going to rehearse any type of scenario that you're fearful of. Any type of scenario. So you're going to rehearse, if the market goes against you immediately, you take a sale because of it's up by the upper range of the open indicator, and the stop should be X amount of pips away. You take that sale and boom, the marketplace just like pops up, goes through, it's coming very close to your stop. What choices do you have at that point? Well, you should have obviously positioned the trade size so that if it does hit your stop, it's no big deal. But if you want to, if you're going to be rehearsing what you could do, maybe you could take off half, then re-enter that half if the marketplace comes back down through that price. There's thousands of things you can do. And the most important thing that you have to realize is in your mental rehearsal, what you're doing is you're giving yourself more choices. You're adding more sub-modalities to your mind. More sub-modalities. So the more sub-modalities you have, the more choices you have. You just don't have this action-reaction thing like it's already pre-programmed that I'm just going to, spin 3 times in my chair, scratch my chin, and cry because I lost money. That's not going to be one anymore. You're going to be adding choices, which is very important. Market's going in your favor. What choices do you have? Some people's sub-modalities immediately take the profit. 10 pips, I'm taking it. Oh, I made 10 pips. And the market goes 400 pips in their favor. That's a sub-modality. They cut the profit because they were fearful of losing the profit. Can't do that. Because for the days, let's say, for instance, you're risking 1 R on a trade and, you get 1 R back. That's not the trade that's going to make your month. It's like when you risk 1 R, you're trying to get 2.5, 3 R back, 3 times the risk. Those are the ones that are going to do it for you because you could have a lot of 1 R losses. And that's not going to do it. So again, you're mentally rehearsing what, if markets go against me, what am I going to do? If markets are in my favor, what am I going to do? And one of my mental rehearsals is that and I do this, is that I say, okay, I enter a trade, market's going in my favor, it's breaking up through certain levels that I say the market should continue in my direction. My mental rehearse sitting on my hands. And I do that now. So the market's in the money, and instead of me touching my mouse, I'm sitting on my hands. So I prevent myself from taking the profit too early. Now, here you say, well, you've been trading for over 30 years. Yes, and I still meet up with these challenges. I'm a human being. So I have emotions. I have to conquer those emotions. And one of the best ways I know of conquering that emotion was to actually sit on my hands. Might sound strange, but it works for me. Observation part 3. This is where you're going to be in your trading room. You've already decided that I'm in great shape today. I mentally rehearsed issues so that if things happen, I have more choices to choose from. So you're going to be basically looking at your charts on the time frame you trade. What actions of lack of actions do the market show you? So now you're actually looking at the chart, observing what happened. Where are the pivot points? Where was the support point? Where is the resistance line? Where is the support line? Is the market trending? Where is my system going to give me an entry? And where would the exit be? So this is where you're actually physically looking in the forest. You walked into the forest now, you see the trees. And now you need an overview of the forest. So these are the actions that you're going to be doing in order to participate in the market. The other O, OODA, is orient. So this is the point that where you enter, okay, you need to step onto your trading chart. Where am I on this chart? Where am I entering the marketplace? Now, since you gathered some data, it's time for you to come up with a low-risk trade idea. Now, here's the thing. Your system should be giving you a low-risk trade idea. If there are some of you that do not trade with the system, you trade off of, I don't know, intuition. I like to call it intuition at times because you don't have a system. But if you do, and if you're successful with it, that's great, you know. But if you've gathered data and you come up with a low risk idea, your trading system gives you a low risk idea. It's approaching a low risk idea. You don't jump to a conclusion at the same time you come up with the low risk idea. So let's say the system says there's going to be a breakout here. The marketplace is approaching that. So now what you're doing is you're going through mental rehearsal again. Market does this, I'm going to do this. Market gives me this signal, I'm going to do that. But you need to be really objective and dispassionate about the signal. Remember, the signal is a story you're telling in your own head. It's not in the marketplace's head. It's in your head. So you must be dispassionate about it. So the system gives you a buy breakout and you take it and it loses money. Well, that's fine as long as it was in your risk parameters. The second part of the orientation is the stage where you let the market send you clues. Now, let's say, for instance, you did get that buy and it didn't work. Well, the market's giving you clues. You're trying to get into the flow of the marketplace. So let's say that 20 pip loss was actually valuable information for you. It's telling you, hey, there's a lot of sellers up there. So next time I approach that, okay, and the system doesn't give me a buy signal, or comes close to that point, well, maybe I want to take a short using a trend degree or something to get me out. So really, it's where you're observing market price action with a broad focus. It's a slow-moving time frame. Now, this is the hardest part for traders. It's being patient, waiting for the market to come to them. You got to be like a hunter at this point, waiting to jump on the weakest prey. Decide. So you're already observed. You're already orientated yourself. You had an orientation of the marketplace. And all of a sudden the signal goes off. You have to make the decision. You got to go through. You got to go through with it, especially if it's a system that you backtest and you're comfortable with. Because a lot of times when markets are roaring up and there's a sales signal that's given, it's really hard to take. It's kind of like, standing in front of a freight train. And also the opposite would be when the marketplace is falling down and you get a buy signal, it's like trying to catch daggers. So it's, mentally, it's a game, mental game again. So you decide what the system says this, you go through with it. And then guess what happens? We re-enter the mental loop again. Observation, orientation, the decision's already been made, but this is how it should work. The act part. The decision came that you're going to follow the system. Here's the act. It's time to jump into the battle. So what should be the mental process? It should be see the signal, feel good about the signal, take the trade. Once the trade is taken, we're going back to the observation, which we would call monitoring. When we're monitoring a trade, we're going to be assessing some things. And I'm going to go over that on the next slide. But as we're monitoring the trade, is the trade moving towards our profit target? Or is the trade moving against us? Should we abort the trade before the stop is hit? It's always good to save money, but you can't be, we used to call them panic merchants. They panic over like 3 ticks against them. They panic. They take the loss. Meanwhile, the market, that's not real movement. That's just basically, to and fro. There's a lot of movements that are meaningless, So when we restart the loop, and say, for instance, we took a sale, okay? We're going back to the observation phase. We're monitoring the position. The monitoring occurs a second after you enter the trade, only 5 times faster. Now you're really focused on what the market price action is doing. Now, many of you potentially can't do this. You're working and the trade is taken because you're placing orders and the trades are done. Well, you have to rely on your stop. But I'm talking, this is like a day trader that's going in and out, 3-4 times a day. These are the sequences of mental attitude that they should have, or mental modalities they should have. So when you jump in, after the decision, after you acted, okay, you have to ask yourself, is this trade working? Is the enemy too strong? Perhaps I was early. Am I going for the kill, which is that big profit target, or am I boarding the trade and to re-enter the battlefield at another point? So the best way to do this is actually the same type of thing. We're going to use a scale. You need to ask yourself, how does the trade feel? It feels easy. It's going right in my direction. It's awesome. It's fantastic. Well, that's great. The trade feels neutral. I sold it at 12. It went to 16.18. Now it's 9.11. Now it's 7.9. Now it's back to 15.18. Now it's back to 9.11. Well, that's a neutral. That's a neutral. The market hasn't decided. You took the trade, and the market has not figured out what it should do according to your plan. It happens. Trade is hard. I sold at 12. Immediately went 14.17, 17.19, 20.21, 16.18, 14.16, 13.14, 12.13, 13 paid, 13.15. That trade is hard. You sold, and it's just bouncing up, coming. There's some resistance up there, but it's still bouncing up. Now, here's the point. If most of your successful trades are easy to neutral, then those are the ones you should keep. The hard ones should be exited before the stop loss is hit. Now, that's not to say that the marketplace isn't going to change its profile in a couple hours, but you could always exit and go back to the loop observe, orient, decide, act. That loop constantly has to keep playing over and over again. You're like a fighter pilot at this point, or a soldier at this point. You're observing the battlefield. You're orienting yourself to where the dangers are. Okay, you make a decision to take, I don't know, the hill. So you bring your platoon and you take the hill. Then as you're going up the hill, it's too strong. Guess what? Like the Marines, they never retreat. They just go in a different direction. They attack in a different direction. It means they go backwards. But, so these are the points that I'm trying to get across to you as a trader. You need to pay close attention to fine details of the market. You need to be alert, vigilant, and suspicious. You gotta be very suspicious. So I hope that with this, I believe with the trader mindset videos that are part of the Tao of Price course, it will really help you. And I can't stress enough that you should be, keeping a trading log, a journal. You should be doing some type of exercise. You should be eating well. This is really like an Olympic sport. People that approach this thinking like, oh, it's so easy. All I had to do was sign a couple of pieces of paper and send my money in. Well, it's designed to be easy. Other professional traders want your 20 grand or 10,000 or whatever you opened your account with. So the design is easy. Brokers want your commission. They don't care about you. They care about your commission. So with that, I hope that you enjoyed it. I did my best to make it entertaining. And I'll see you soon. Cheers.